All right, welcome back to my channel. It is Friday, January 29th, 2021, and this is my weekly trading recap. So it's been quite the week in the stock market. A lot of interesting things have happened. And, well, you can see here on the SPY that we've been looking for a rollover for a couple weeks now, and it looks like we're getting that. Now, we've had this trend line since November, or maybe you could say it started in September, that we broke through today. Let's see, let me zoom in, go to the hourly chart. So we sort of had a top, a gap up, a top, and then a gap down, and then we weren't able to recover above that longer term trend line again. And then since then, we've just been going down. And we closed, well, we went down on Wednesday, had a little rally on Thursday, and then Friday, well, the end of Thursday and Friday, we sort of rolled over and continued this downward trend. Okay, so bigger picture on the SPY, we've had, let's go big picture. We've had an uptrend line since the 2008 crisis, and we've been climbing up that line, but in 2018, we broke below this trend line, and we've sort of been running back tests since then. And one possible scenario I had charted out was a scenario that results in another sort of super fast flash crash. And you can see the previous one back in March resulted in about a 35% drop, I guess from the highs. Yeah, about a 35% drop. The next one, if it happens now, would result in around a 50% drop. I think it's pretty unlikely that this pattern continues to play out in this timeline. Why did I select, this date for this drop to occur? Basically, it was the time where we started to creep above this longer term trend line. And any time that's happened in the past, it's been, well, at least since 2018, it's been slammed down, which, I mean, there's only once, but, it's something to start thinking about the pattern. I don't think it's likely that this will play out. Maybe I give it like a 10 or 20% chance of actually playing out this way. But at the very least, we are in a down week. We're in a couple of down days. I think it's likely that we continue this rollover, probably to retest either here, the tops around the 352.71 area, or down here at the 327.39 area. And most likely the top is where we're stopped, and then maybe we'll continue sideways for a while and then continue on up. To me, that's more likely, or the most likely scenario. I do expect the entire market to have a significant crash, bigger than the March crash. And the reason for that, well, there's a few reasons for that. Okay, so the first reason is in the March crash, or before the March crash, we were sort of due for a very significant correction in the market. The debt levels in the entire world are just getting to astronomical levels, and kind of the higher the debt goes, the more pressure there is on the system to correct itself and kind of revert to historical means. So that debt has been enabled by historically low interest rates. So many places in the world are at 0% interest rates or below 0% interest rates. And this allows the debt to continue growing at exponentially higher levels, which is why so many people are so bullish on the stock market, even though the economy is absolutely, trash. The pressure that debt puts on the system to correct itself and deflate, gets higher and higher as the debt increases. The Federal Reserve, since 2008, has really been pushing. I would say that the debt bubble in 2008, a lot of people who are smarter than me would say that it was not allowed to deflate entirely. Since 2008, the Federal Reserve stepped in to try and basically apply modern monetary theory to keep the debt bubble from collapsing, to basically prevent the sort of pain on the asset market and markets, on financial assets, to prevent the pain. But the idea was that they would reduce interest rates and do a bunch of other things, buying financial assets to ease the sort of recession that was occurring, and put off that sort of deflation until financial times were better. Well, we kept putting that off until now. We were basically stuck at 0% interest rates, or just above 0%. I think it was a couple percent. It was really low. It was historically low coming into this crisis. And the promise of the Fed buying up financial assets, and I guess the buying of those financial assets, has allowed money, it's sort of reassured people to come back into the market. But now we're seeing levels of euphoria in the market that we haven't seen since, I would say, the dot-com bubble. There's some crazy things that I would have never imagined happening, like those WallStreetBets stuff that I'll talk about a little bit later in the video this week. And I think what can happen with that is people are going to start losing confidence in the market. If WallStreetBets is able to drive these hedge funds into bankruptcy by bidding up short-sold stocks that are heavily shorted, that shows, one, the power that they have, and it kind of flips the tables on the assumptions on the market, and it will make maybe people will start to take profits and be a little bit more conservative in the market. And the question is, can that start a landslide? I guess this is what we're seeing play out right now. Is I think part of this downturn that really, when did it start? It started, I guess, January 26th. That was Tuesday and Wednesday. So that was the same time really started seeing the headlines in this GME stock fiasco. And so I think part of that was caused by people. Well, for one, hedge funds had to probably sell. Hedge funds that were shorting these stocks had to probably sell other stocks in order to come up with the funds to meet their margin calls, or buy the stocks that they needed to cover their position at a much higher price. So that's one thing that could have caused the wind down. The other thing is we had some negative vaccine news this week that could have been a thing, or it could have been, I mean, the chart says we were due for a correction, so it could have been inevitable, even if there was no news that would have caused it. So another thing to look at, and this was pointed out by Stephen Van Meter on his YouTube channel. He is a macroeconomist, and I definitely recommend checking out his channel if you haven't seen it. He is a lot better of a economist than I am. But if you look at the gold chart, or the gold miner stocks, so yeah, GDXJ works, versus the S&P 500, which is in orange here, the miners sold off very sharply at the beginning of this financial crisis in March, or I guess the market sell-off in March. The market moved about 12%. The miners sold off, much more significant percentage. I guess from top to bottom, the miners moved 56%, whereas the market only moved 30%. But yeah, there was a really sharp sell-off right when you started to see that there was definitely trouble. The miners really sold off, and the miners didn't really sell off in the same way during these corrections. I guess they did here. So yeah, this may be something to look at. If the miners do sell off sharply, that's another warning sign that something's wrong in the market. But you can see there was these sell-offs along the way while the market was moving up. But these sell-offs, at least after the first sell-off, never broke trend. So if we see a trend break in the miners, that's probably where you'd say, okay, there's definitely trouble in the markets. And you can see leading up to this, there was a trend that went on for a while, and it was broken. How long did this trend go on for? We could go to the weekly chart and maybe see. Yeah, so there's ups and downs. I don't know how useful of this is as an indicator, but it's something to look at. All right, and the GDX essentially looks the same when you look at a chart of it. A really sharp sell-off right when the market was starting to see trouble, break of trend. And I mean, there was trend breaks on the S&P chart as well. So we want to really look at both of these to see if there's trouble in the market. The fact that the GDX is sort of in a bullish or a bearish pattern already tells me that, well, just by the chart alone, I don't think a sell-off in the miners is coming. But if we break below, let's turn this off. If we break below major support in the miners, which is about here, then yeah, I think we're going to see trouble. So we're really at a we're at an inflection point here, I think, where the market's in a few days, we're going to see if there's a continued downtrend. If the GDX, if the miners fall through the floor here, yeah, that's trouble. So be ready to take your money and run. That's what I'm going to be doing if that happens. Okay, quick look at the FANG stocks. We got Facebook. It's not looking too good. It's basically broken down below trend. Did a couple back tests. Well, one back test, a second attempt at a back test. Now it's just breaking down, probably to the bottom of this trend. Well, to this support level here. Apple, we had a breakout above trend. Well, basically we broke down below trend, which is bearish. Then we recovered and it looked like it was a breakout and it failed. So that's pretty bearish. Probably this will be another one that we see it move down to here or here, one of the two areas, depending on how long this downtrend lasts. Google, we're still looking okay here. We've got a kind of rising wedge pattern happening. Hasn't broken down below yet. Slight bearish divergence. So I think it will eventually, but I'd give it a couple more months. Amazon, we've got this basically funnel pattern, which could be bearish or bullish. I think it's going to be bullish. I think this is going to break out soon. So maybe we head down to the bottom of this trend channel, or sorry, to the bottom of this trend line, and then reverse course, and we're green on Apple again. Netflix, I don't think I covered this one. We basically broke down below trend, made an attempt at recovery, failed, and now we're down below trend still. I think we're going to go to the bottom of this really narrow horizontal channel. Okay, so here is our stock basically visualization tool from FinViz. It's showing everything's pretty red across the board. No real divergence. It's all pretty much a unified red streak across the entire marketplace. All right, so I'm recording this mini recap a little early on Monday. I wanted to make a note of an observation that I made. I don't know if it's an observation, but basically a change in the way I want to trade based off of a kind of observation that I've been seeing. And that is, for a lot of these stocks, they end up playing out the way you expect them to. But what happens is they break down partially, then they do a retest, then the real breakdown happens. So I think a good example of this, I mean, the first example is Macy's. I haven't, it hasn't been long enough to see if this second entry point is the actual area where it will break down. But the point is, rather than entering, say right here after it starts to look like an impulsive breakdown, wait until it does a retest and then make the entrance there. And maybe the other thing to note is if it actually is an impulsive breakdown, the daily volume should be a lot higher than average. Like the volume for today, when it did a retest and it, tried to break back into trend and then at the end of the day failed, the volume was a lot higher. And so I think those are the two things to think about, is either much higher than normal daily volume or a retest of trend to start taking a short position. Nike is a great example of this. It broke down, and it probably, I think I entered the trade when it broke down, but then it came back up, and I think my first trade may have gotten stopped out. I'm not sure if I had my stop loss high enough to where I did not get stopped out or not. I'll look at that later. But I did make an entry here at this level where it did a retest, and then the next day, it tried to break back into trend, failed, and that's where it actually broke down. And today it looks like it's, doing a pretty good correction. Okay, it is Wednesday, January 27th, 2021. I am bringing this or doing a sort of midweek recap that will probably end up in the end of the week video. And the reason I'm doing that is because there's some stuff that happened today that is important to point out. So the first is what happened to the market. It has finally just shown us, I guess, its colors, what it is going to do, and that it revealed, I guess, itself in a breakdown today. So looking at the SPY, we have a really red day. I guess the biggest red day since, well, January 4th, which I guess was a false breakdown. So we're going to see if this is another false breakdown. I'm not sure it is because, well, for one, there was not really any real catalyst that I could see. The Federal Reserve had its, I guess, FOMC meeting today, and really they told the market kind of what it already knew, which was 0% interest rates for the foreseeable future. They're going to continue what they're doing. So I don't see why that should be bearish for the market. It certainly wouldn't be bullish, but I don't see any reason for it to be bearish. So this breakdown may continue throughout the rest of the week. I don't know yet. Well, let's look at the breakdown of the breakdown, which is, what happened. We started, well, on January 19th, which was the end of, well, it was Tuesday of last week, to January 20th. So I guess Wednesday of last week, we had a gap up and then kind of stayed above the long-term trend line all of last week. And then today we had a gap down and a big drop. And you can see it tried to recover, once, twice, and then, it failed. And each one of these failure points was pretty, well, at least the first one is a pretty significant sell-off. And, it got bought back up, sold off again pretty quickly, got bought back up, and then sold off again to break below a shorter-term support level. This support level, well, it was a fairly significant support level. Oh no, sorry, I'm looking at this one. Yeah, this was basically a support level. Not too many reactions, only 2 reactions that I can see so far. There may be a reaction here, but that's not as important. So we're below what I see as the short-term trend line. This may not be the most accurate trend line, but it's really, there's not very much data points to draw this from. We're just below that. You may draw it something like, this. You may be able to get away with that to where you'd say, well, it just barely recovered. So we just don't know until tomorrow. I expect high likelihood of more selling tomorrow, but there's a good chance that there's a recovery as well. So I'm going to give it a 50-50. Looking at, let's look at the VIX first. The VIX is, well, you're seeing the highest levels of volatility since October. So I think that's kind of telling. If you're seeing volatility that high, we broke out and closed above this short-term kind of trend channel, megaphone pattern, whatever you want to call this. We broke out of that and closed today above it pretty strongly, it's very, very impulsively. This is a huge move. So I can see it. I think it's likely that this breaks out of this level and then we see some real selling over the next couple days to weeks. It doesn't mean it's going to happen, but seeing this much selling action and no rebound or no drawdown at the end of the day, that that tells me, that's an alarm signal that there may be more selling to come. I'm going to look at the SPY and triple Q next. Okay, so triple Qs. We aren't below the bottom trend line yet, but we did clearly break back into the upper trend, or I guess we clearly broke back into the trend channel. We popped above it last week, stayed above it all week, and now we closed back in. So this is not the blow off top I suspected it was last week. It's this breakout is failing, so that's bearish. And you can see we have negative divergence since December 8th, if you consider the most recent high. So I wouldn't be surprised if we broke down below this, but we could easily stay within the channel for a while longer as well. IWM. So this is interesting because we broke down here clearly, and we've got this kind of doji candle. I think that's what it's called, is a doji candle, where there's no real body and a wide range for the day. So if we don't recover tomorrow, or at least make a attempt at recovery, I'd say if we don't recover in the next day or two, then this is pretty bearish for the Russell 2000, for the low cap stocks. And while I am on the subject, I think it's worth pointing out just how crazy the small cap market has been. Let me show that next. Okay, so take a look at some of the stocks that are on this high of day scanner list. This is a screenshot from a live stream of basically a trade ideas stock scanner put out from, I think the Boiler Room YouTube channel publishes this, or live streams their stock scanner. Now this, I just want to point out the names on this stock scanner. So the top names on this scanner, just look what these stocks are. EXPR, this thing has gone up 1,000%, over 10 times in just since January 21st. That was last week. Next one, GME. This stock since January 12th has gone up 15, 16, 17, 1800%. Next one, I guess this isn't necessarily in order, but costs. This one has gone up 1800% in just a couple days. AMC, same story. Just a few days, 800%. I think you get my point that this is not normal. And you know what's even crazier is look at the names, or look at the reasons given for these stocks surging. Normally it's some good news, or day traders jumping on, the bandwagon to try and pump and dump a stock. But that's happening here, but it's a level I've never seen before, and to a number of stocks I've never seen before. So look at this. Express stocks skyrocket amid Reddit-fueled frenzy. So I don't know if this was a short squeeze. I think this may have been a short squeeze. So Express is one of several companies that have recently been the target of speculation on WallStreetBets, a forum on Reddit that's behind the flurry of action seen in companies such as GameStop and BlackBerry. It has not made significant public announcements in the last week that would have contributed to the sharp rise in stock price on January 14th, or on stock price. On January 14th, Express announced it had entered a definitive loan agreement for $140 million in financing. That day, the company's stock increased 24%. Let's see. $38 times the volume. So for whatever reason, Reddit has jumped on this stock. Next article, Costcorp stock soars after being dragged into Reddit investing frenzy. Let's see if this was a short squeeze. Yeah, I think so. So this was basically a short squeeze. GameStop was absolutely a short squeeze. This has sort of been on the top of news stories lately, that a hedge fund or a investment firm was shorting this stock, and WallStreetBets, kind of came together to push it. And I think this is what kind of started all of this off. But CVM is another stock that was riding the Reddit wave. Okay, so Ver Biotech, that's the stock 1, 2, 3, 4, 5, 6, 7. Finally, seven stocks down on the high of day scanner. It's actual news that drove the stock going higher. And what was the gain on this? This was a 56% gain. So that's more of what you would expect in normal market activity, a normal hot market. But this tells me something on another level is happening. Okay, so amid these small cap stocks that have just been tanking, what are the FANG stocks doing? Facebook is down, 3.5%. It looks like it had broken trend. It was coming up to do a back test, and it failed short of that back test. Apple. Now, Apple had failed trend, and then it recovered, and it still looks like it's recovered, but it still has had a down day. So I think it could continue to stay above trend if the overall market supports it. Let's see. This is out of order, but Google's been in this rising wedge pattern. It looks like it's just having a move to the bottom of the channel. So nothing to get too afraid of there. Netflix looks like it had a breakout of trend, and now it's failing that breakout, which it's going to go probably at least to the bottom of this trend channel. And that would have been a good short if you would have seen it ahead of time. But that kind of shows, let me show, I guess, if I can, this other thing. Okay, this is FinViz's S&P 500 sort of visual of the stocks moves that have been in play. I guess Amazon is one I missed on that list. Across the board, everything is down. There's a few things in random sectors that are up, but pretty much everything is down across the board. So that's what you would expect for all of the indices to be down. But what's interesting is all the news media is focused on these few stocks that are getting short squeezed by WallStreetBets, but everything is down. Okay, now just looking at a couple news headlines. We've got Dow drops more than 600 points, worst day since October. Apple had a huge earnings report, beat expectations by a mile, still dropped. Tesla, first full year of profitability, yet it's negative. Facebook's ad revenue, I guess record revenue from ads, and yet it's down. Now, these earnings may have been posted after hours, but I guess Tesla missed estimates. Yeah, Facebook beat quarterly revenue, but it's down quite a bit. Or it beat quarterly revenue expectations. So you can see generally revenue is better than expected, but companies are down. Now, this could be buy the rumor, sell the news happening, where people are getting out just before earnings. That's possible, but I think we'll find out, in the next couple of days to weeks, what actually plays out. Okay, next up, I want to point out some, I guess, blunders I made in my trading today. I wouldn't really say these are mistakes. Well, they're mistakes, but they were mistakes that were obvious, right after I made the trades. If I would have taken a few more minutes to stop and think about what I was doing before I made these trades, I don't think I would have made these mistakes. So let's look at what I'm talking about. AMD, yesterday I had a position, I think here at 93.56. I sold shares or shorted the stock at 93.56 a couple days ago. And yesterday I sold half of my position because I was nervous about the earnings report causing that stock to soar. Today I found out, that the whole market was down. So I was well in the money with the half position I had. But this stock was tanking at market open, and I saw it breaking down below all these levels of support. And so I sold more shares. I think I doubled my short position right down here. And shortly after I did that, the stock reversed, started going up. Let me look at a closer time frame. Let's just do the 15-minute time frame. Okay, so is that right? Yeah, $87 is where I shorted. Okay, so no, I actually shorted at this blue level. So yeah, just below or just above the entry that I had set up for a trigger entry. So yeah, here's, I guess what happened is the stock dipped like crazy. I think I bought on the way down. It went down a bit more. Made another attempt at breaking down. And you can see this looks quite a bit like a It could be a bottoming pattern, high volume, stock goes straight down and then straight back up. But I sold my shares here, sold into the selling, and it rebounded, and it never fully recovered, or it never fully broke back down into its lows. And you can see it, well, it's settling just above. Ended the day just a little bit above a support level. So it's kind of between this resistance level and this support level. And so I guess my point is I got a bad entry, and really the lesson that should be learned here is it's one I kind of already wanted to practice, and that is to not take a position while the market is moving like crazy. Because as a swing trader, I want to be making sure that we're getting at least hourly closes above or below a certain level before I take position. And maybe it's something where I need the intuition to know, is it going to stop at a level, or is it going to break right through level? The probability is on the side of, if a stock overshoots a support level or breaks down below a support level, and on a short time frame, sort of blows right through it with the market moving, those levels aren't often supported or respected when the whole market is moving. And usually, once it calms down, the stock will rebound back to that level. And so it's important to not take a position if a stock's moved a good ways very quickly, running through a level of support. Rather, it's better to wait for the stock to consolidate and then break down again below that level, or wait for a rebound. So I should not have taken a position on AMD at all today. Probably the best thing to do would have been waited until near end of day, or at least waited until I saw hourly closes before I decided to take a position. And then I probably would have decided not to, because we're kind of in this range where you don't know what it's going to do next. If it recovered back up here, maybe that was a place you would add to the short position. If it breaks down below here, then that's another place to add to the position. Okay, so this next stop is Peloton. I did the same thing here. The stock opened the day. Let's go to the shorter time frame. Turn off extended hours. So today is the 27th. So the stock opened the day screaming down. I took a position. Let's see. I took a position at 139.57. So yeah, I guess at this red line. That was right at the bottom. This thing, yeah, went down, opened the next candle, went down a little bit more. I took the position open, and then it turned around. So this, I guess, burned me as much as it possibly could have. And so it rebounded all the way up to here. I guess it found a support level here. It's not, well, if you go to the daily chart, it's not obviously it's not obvious that that's a support level. But if you go to, that, I guess the 15-minute chart, it's an obvious support level. But that's that's not important right here. What's important is that I didn't wait for the stock to settle out and decide where it wants to stay before I made a move. Now, if I had an order trigger set up, this would have triggered, beginning of the day anyways, and then I would have gotten stopped out. So this would not have been any better if I had my automatic orders set up where I wanted them to be. And you can see, let's see. Yeah, I could have set this order entry lower than sort of intraday volatility, so that if it did trigger, it would have been from like a really far move down. So this was a bad position entry setup anyways. It should really be down here. Well, that's okay. But I was actively managing this trade, and I basically just got emotional and rushed into the trade without thinking about what was happening. So that's I guess, I don't know if it's even a lesson to learn. It's one of those lessons where I sort of knew better, but I did it anyways, and I got burned. So I guess it's still a lesson to be learned. But it's not like I didn't know better. The objective areas to enter this trade, I think my plan going into the day was to open a position if it broke down below the support level, and impulsively broke down. And I guess it did break down below the support level and it was impulsive, but I wasn't seeing hourly closes below. So that may be a new rule to incorporate, especially if it slams down into resist or support so hard. It needs time to consolidate before it goes through. So those two things are things to think about going forward. What ended up happening is this rebounded. The whole S&P was sort of going down while this was consolidating up here. So I didn't think, I thought Peloton was showing relative strength because it was going sideways while the rest of the market was going down. So I sold my position, I covered my position up here. And then that's towards the end of the day, the stock, fell down again. So I took, probably a $60, $70 loss where I shouldn't have taken the trade at all to start with. And if I would have held on and waited, this stock went back down again. But I was already over my stop loss, so I knew I had to get out and basically had to watch the stock until I got out. I was waiting to see, the S&P drop again. I saw it drop. I didn't see this stock drop with it. So I figured I probably wasn't going to have a good opportunity to get out of this stock with a better stop loss. And I think, or with a better loss than that. So I think exiting the trade, I don't have any critiques on. Entering the trade's the problem though. Okay, looking here at Virgin Galactic, this is a trade where I've been holding half of my position since my entry here. So I was well in the money on this trade. And at the beginning of the day, this stock just soared. It went straight up. Oh my gosh, I didn't realize it went up so much. 35% at the high of day. And I didn't exit the position because my profit target, I didn't take any profit off the table there. My profit target's up here at $90, and that comes from this whole idea of you're going to have something like this movement from bottom to top. 230%. Actually, what was the movement? Yeah, somewhere in that range of movement from bottom to top. That was the expected move. So that's why I didn't exit the position. I was just holding to reach that final profit target. However, it went way up and then it went all the way back down. And then I decided to exit half of my position here because now I wasn't so sure anymore what it's going to look like. Is this a topping pattern? I don't really know. The volume's super high. It went way higher than, it definitely looks overextended. I guess we could do some stuff like this and say, okay, maybe this pattern's still intact and it just got way overextended and it's going to continue going up and it's just dipped a little bit below. We'll see if it recovers tomorrow. I guess if it recovers tomorrow, now I wasn't thinking at this level. I wasn't thinking shorter term trend lines. I only saw that just now, but I really didn't know what to think, and so I just got out of another half of my position. I guess the question is, I would have made 35% more profit. That's a lot of extra profit that I left on the table. Probably, I guess dollar amount doesn't matter. It's 35%, and relative to my position entry, that's quite a bit of money. So really what I'm looking at here is answering the question of how to manage the trade at this point. Maybe you see the stock way overextended, surging up here, and just decide ahead of time to take profits, partial profits along the way. I set these levels as possible potential, levels to take profit at. I guess the other thing could have been to maybe see if I could find some sort of trend ahead of time, and if it gets too extended away from that trend, or if the RSI gets too overextended, those are the points where I take profit. Or look at, shorter time frames. What did the 1 minute look like on today? Yeah, I mean, you see a peak, you see it try to recover that, and it makes a lower high. That's another signal that this stock's going to break. Actually, this looks like a sort of volatility or a funnel pattern where, something like this could be another signal. It's making this consolidation pattern. If it breaks up, stay in the trade. If it breaks down, get out. That would have saved me. Why is this not working? Okay, that would have saved me about 10% profit. So we're going to see if this Virgin Galactic continues going up. I think, there's no losing on this trade, but the difference between, it could be a difference between 50% of my profit. Okay, so another stock I was disappointed about today was Rocket. I wasn't disappointed with Rocket's performance, but I was disappointed with how I handled the trade. So what happens is, the stock, just like pretty much all these other high runners, surged up, let's see, 27th. Yeah, so it goes straight up at the beginning of the day. Nice 10% move, huge sign of strength. And then I wasn't really watching what it was doing on the shorter time frame. I just assumed, this was going to keep going up or consolidate and go up more later. And let's see. As far as levels where it would consolidate, yeah, it did hit a resistance level. And so it makes sense that it would consolidate here. At the end of the day, this stock tanked, and I saw that I was, down from $90 a profit at the beginning of the day to basically break even at the end of the day. And so I decided, okay, I don't want this to turn into a losing trade, so I sold half my shares at break even. And the reason I think it might turn into a losing trade is, well, you have this huge stem on this candle. It has broken through a support level. The stem did, but on the daily chart, it had failed to close above. So that's bearish short term. So this stock may just decide to, come back down and do a retest, or it may break out. But my worry is that if the S&P and the greater market is showing real weakness, then this stock could break right down, and I don't want it to be a full loss. So yeah, I guess I'm disappointed that I didn't capture profit where I could have when I saw weakness on the stock. But I was managing so many stocks. How could I know? How could I really monitor this stock to take profit on it? Is this something where I need to be watching all my stocks simultaneously? So that's another question that I need to answer in order to improve my trading. Because the market is uncertain, I guess I can't say I'm upset that I took some off the table. If this is a half trade and it's still successful, well, it's still a good trade. I mean, I'm still going to be happy with the amount of money I make off this trade, or the gains. If this turns into a losing trade, my loss will be small. So this may be something where if it retests this level, but the overall market is not showing tremendous weakness, it goes flat or rebounds, but this level gets retested, then I may go long again. Let's see, what else did I do? Okay, Allo did not show any weakness at all today, but most of my other long positions did. So I decided I'm not going to make the same mistake of letting this, run up to a high and then run all the way back down to break even. I'm going to just take some profits off the table right now. So that's what I did. I took half my shares off the table, and I think I'm going to hold the rest of the position to this target here. Okay, Snap, I did decide to open half a position here today at the end of day, and you can see we closed right at support. The reason I took the short position was because we're below trend here, and if the market sell-off continues, then I think we're going to see this stock gap down overnight, and I want to capture that gap down. But I don't want it to be a full share position because, well, we are at support, so we're likely to come back up and at least retest this trend line. I think probably the smartest thing to have done would have been to wait for a breakdown or wait for a back test to enter the position. Entering here, probably not the best thing to do, but it's not the worst either. I would say it's kind of I don't love it and I don't hate it as a decision. Okay, so since I've gotten this far already, I may as well share the rest of my trades today. So D-Dog, I think I closed half of my position. No, I closed. Okay, so I closed half my position this morning at about a $101 level. And then I closed the other half later on at a $99 level. And the reason I did that, well, it's obvious. Yesterday it looked like it was coming in for a back test. I decided I was going to wait and see before I closed my position. It wasn't a gap test, it was a false breakout. And so, well, this trade's off the table. Okay, so the last trade that I have anything to say about is Baidu. I opened 2 shares at about $235. 2 shares short. And that was right at market open. I guess just after market open. And I think this trade, I guess because it was so far below trend and it's not right above any real support levels that I can see, it was an okay trade to do at the market open because that's a long ways for this stock to go to recover. I think I still probably should have waited. Let's look at the 1-minute chart to see what it did throughout the day. Okay, wow. So yeah, it had the big gap down, kind of counter rally, and then it faded. So I'm in a fine position being short here right now, and I think the stock's going to continue to make its way down. I doubt that it's going to do a back test, but if it does, then this sort of stop loss would stop me out of the stock. So I'm going to have to decide, am I going to ignore the stop loss? I don't think that's a good idea. If I expand the stop loss, that would increase my loss, dollar amount, but it would still make sure, I don't get totally wiped out. So, yeah, maybe the best thing would have been to say, okay, I'm not going to enter this position until I hit my entry target, because trading is all about getting 1, an edge, and 2, managing your risk. And that means not taking trades that have a poor risk to reward ratio or that exceed your loss tolerance. Now, I guess if you move this down, I think I only took 2 shares short, so I'm fine on this trade. But I'm fine on this trade. Okay, I lied. I had a couple other trades that I took today. This one was Corsair. At the time I took it, it seemed like a good trade, but the whole market was tanking, and that made it probably a bad time to take a long trade. So you can see what happened on the 15-minute chart, I guess. The stock looked like it was consolidating to break out. It did break out, and it failed. What I did was, it broke out. Let me just get rid of that. It broke out, did a back test. I entered here at support, so I was smart where I entered my trade, but I was out of day trades, so I couldn't exit this trade if it, started to go against me. So it rebounded, went back up, and then it faded again and completely failed as a breakout. So I'm stuck holding this trade overnight and hoping that this doesn't gap down. I don't think it will, but I think it's pretty likely to head to the bottom of the trend channel. So I'm going to have to look at my trade size to see if I will be okay with holding this stock, all the way down and waiting for a bounce back to support, or if I just want to get out of the trade first. Probably I'll wait till the market opens and see where it sits. But that is a false breakout, and I don't think it's going to make another attempt at breaking out for a while. Okay, Berlin, I think I closed half of my position yesterday, and well, you can see what happened here. There was a bit of consolidation for a while. The stock broke out here, and I had a profit target set up here. I'm not sure why I put it up here. I don't think I thought too much about this resistance. It doesn't look like significant resistance, so I just called this, a standard bull flag where it was going to cover this distance for the trade. So 2 days in a row, this stock almost hit my profit target. I think yesterday I closed half the position here, 343. And then today, the stock went up, it went down, and I managed, where did I manage to close it? 317. So yeah, I basically closed at the bottom here. I thought this was going to fail. And if you look at the minute chart, so I took a really bad close on this. Let's just do a 15-minute chart. I guess I would have had to close at the beginning here, first 15 minutes of the day. So this wasn't a losing trade, but it was not the winner that I wanted it to be. And again, I'm taking positions at the worst possible time to take them, and that's something I need to, like, opening or closing positions at the worst possible time. I guess that's something that says I need to have a better market sense, as well as using that market sense while avoiding emotional trading, because emotional trading, that throws all the rules and everything out the window. Okay, HGV was a stock that was down at the beginning of the day, and I think this was just on my watch list, and I saw that it was near my entry position, and so I just took the trade near that level, and the stock continued to go in the expected direction for the rest of the day. So I would say this is a good entry. No complaints about how I took it. I took this position at 9:30 this morning, so that was 2 hours after market open in Mountain Time. So 9:30 would have been right here. So that was a good entry. It dipped a little below, rebounded. I didn't get the I didn't get the perfect entry, but I didn't get a terrible entry. It was an acceptable entry. So it's things like this, these trades, the nuances that I think make you have an edge or not have an edge. I feel like I'm very close to being possibly, I think I have what it takes to be a profitable trader, but it's just little things. It's like, so the difference between knowing how to throw a ball and knowing how to throw a ball accurately, training to improve the technique where it's sloppy. Maybe there's just a bunch of little things that are keeping me from trading effectively. Like the big picture stuff, that seems to all be there. The little stuff needs a lot of work. And so yeah, I guess it's going to be a while. Training the emotions is the hardest one. Training the technical and intuitive sense or side of things is also a little bit harder because it's not something you can just learn once and apply. It's more of an art than a hard science. So yeah, here we go into the next week, to the rest of the week. Okay, so let's get into the trades that I have been in this week. The first trade is American Airlines. I was in it. I opened the position, I think, a couple weeks ago, and I finally closed out of the position on the 28th. It had a bull flag pattern, broke out, and I took the position right here. It hit its profit target, and that was it. Now, last week I covered part of the position because I was worried about where it was going. This week I covered the rest of the position because it hit my profit target. Okay, Allo is the next stock I was trading this week. I opened the positions. I guess this week I opened the positions, and then I also closed the positions this week. So you can see where I entered the position at about 31.36. I opened it because it was this sort of, it looked like a bull flag pattern and a breakout, long consolidation period since May really, and it broke out, but I didn't stay in the stock to my profit target for two reasons. One, the market was turning down like crazy, and two, if you look at the shorter term for the breakout itself, do you need if you go to extended hours, you've got this trend line on the 1 hour chart, and we were moving up it pretty steadily, but then it broke trend and it failed to go back into the trend. So that's sort of the signal that if the whole market wasn't in a downtrend, I would probably just take half profits, but I took I took my entire position off the table because it broke trend. AMD, let's see, go back to the daily. AMD, I was short on, when did I enter short? I started my position here, and then I doubled down on my position right about here. Now this was a bad area to re-enter the position, or to add to the position, because I entered it this first day where it broke down, and you can see it broke the support level, but it did not close the day under it. So that made me pretty nervous. The next day, we were way up from my entry point, but then we broke down again. So AMD, I stayed in my position just because it wasn't, I think it turned slightly red on me, but it wasn't at a level where I wanted to stop out because I started the position up here. So this part of the position was in the money, this part of the position was out of the money. But you can see it's continued to roll over, and it looks like it's ended the day today, Friday, just below the second support level, which tells me, yeah, that's bad for the stock. But I can see it rolling up, or sorry, rallying to either here, this $88 level, or here, this $89 to $90 level, and then continuing down, or recovering fully if this market downturn turns around. So I took half profit on AMD today, and you can see, well, because of the way I open these positions, it doesn't show the average, the cost based profit, but from the position I took this week, my profit was about $13 that I took. Okay, moving on. Baidu, I've been watching this for a while. this week, broke trend. I took the position at 235.65, which was right here. So not an ideal entry point, but it didn't really give me much of a chance to get that ideal entry point. I was, I think, waiting for it to rebound. It never did. Did I really take it at that level? 235.65. Yeah, so I did take it at this level. Yeah, the profit and loss ratio, or the risk reward ratio, is still okay for this trade. I would have liked to add to the position here when it at a rebound, but I don't think it's going to rebound. I think it's just going to be, stay in this position till it hits the target and cut it there. Next we have Billy. This position I entered at 114. Let's move this down. Okay, so I entered the position here. About 130 is my stop level. Well, you can see the stock rolled over. I'm not sure I like this entry point very much. When did I enter it? It was today that I entered it. Yeah, I don't love this entry. I would have liked it to be, closer to where it broke down. But this is a trade I'm in right now. Yeah, so even though this trade doesn't have a great entry point, it still had a pretty good risk to reward ratio, assuming that this stock doesn't go and retest the trend line. I put my stop around 130, and it has a good risk to reward ratio. It also has a good amount of volatility, so if it does break down and reach this level, that's a small amount of shares, or that's a small amount of capital I have to put up front, which allows me to do more trades. So Blinn is a long trade I took. It was building this bull flag pattern. It broke out. I took the trade, I guess, right here when this secondary flag played out. And yeah, I had a profit target of up here, basically assuming that this amount of distance traveled would be the amount we travel up here. But the market turned down, and so I started covering or taking profits the 26th, which was Tuesday, and then I closed the position entirely on the 27th. BRP, another position short I took. This had the setup for a good short and broke down. I entered the trade on the 25th. That would have been Monday, I think. And yeah, so far it's just been playing out in my favor. I expected maybe for it to catch a bounce here, but yeah, it looks like it's just going straight down. So there's really no support from here to my profit target. So I think I'm just going to continue the plan to take profit at the target. I probably won't stay in the trade beyond that because there is pretty good support here. Okay, Corsair was a trade I took against my better judgment. Because the market was in a big downturn as this was breaking out, you could see, let's bring the volume back. There we go. Okay, so it had a breakout, high volume. If we go to the hourly chart, yeah, there was a breakout on high volume, and I missed the trade initially. I missed the initial breakout, so I entered the trade at the retest, or so I thought. And so I entered the trade here, kind of this level of support, but this kept breaking down. And so if you go to the extended hours, I got lucky and I put in an order after hours to sell this position here, and so the stock rebounded overnight, and I was able to, or out in the pre-market, and I was able to get out of my position without much of a loss. Yeah, you can see. I'm not sure. Okay, yeah. So I got out with the 80 cents loss. CRWD. This was a position, let's see. I entered in short 2 weeks ago. This week, okay, yeah, I guess I got stopped out of part of my position this week when it rebounded. But the rest of the position I'm in, 2 shares short, and it's been continuing to play out. It bounced here and is continuing. I expect it to continue down towards, my profit target. This level of support wasn't very strong, so it should break through 1 or 2 more bounces at that level. I guess one thing to consider in the future is taking profit along the way, which is something I started to do today, but I could have on the 27th taken some of this profit near the low so far, because right now I'm basically break even on this trade on the shares I have left, which is not ideal for something that has moved 10% in your direction. DDOG is, I think I originally had this chart drawn out like this and assumed that this was like a false breakout here, and then this was the actual breakout. So I took the trade here, and then I took a little bit of a loss on it. Actually, yeah, a little bit more than I would have liked, $28. And so this was basically just a nothing trade. Seeing after the fact, what I see is that, well, this is probably the actual trend. You've got three interactions or three reactions at this trend line. And so maybe this is still good to break out in the future, but I misread the chart when I first took the trade. Okay, Etsy, I opened this position last week. I think when I've been saying a lot of these positions opened last week, it was 2 weeks ago. It was actually last week, but just look at the dates if you don't believe me. And, well, this short trade has played out in my favor. I took some profit today because, well, it was at a support level, and I wanted to make sure if this bounces back that I at least have some profit taken off the table. EXK, I opened this trade today at the breakout of this, I guess, equity. Yeah, silver has had a really strong day or couple days. Some of that might have to do with the WallStreetBets stuff. Some of that might be fundamental based. I guess we'll have to wait and see. I'm not sure I expect this trade to play out, but it is above a level of resistance. It is a kind of objective area to enter long. So we'll just have to see if that long trade plays out amidst a market that is falling. FedEx. This is a trade. Well, I've been in this trade for a while. I took I added to the position this week when it broke below this second trend level. And yeah, I guess this was sort of a long-term support level. It broke below, so now I'm expecting it to go down to at least here, if not here, at this 174-ish level. GRWG, not much to say about this. I entered the trade, covered. Okay, yeah, it's going to be these two rows. So I entered the trade short up here, got a great entry point at the retest, and I covered one of my shares today, one of my 3 shares. This should be like that. And so this should continue to fall with the market or without the market, is my expectation. Okay, so Green Sky, this was a trade I entered quite a while ago, I could think. Yeah, 2 weeks ago. So I entered long for a longer term swing trade as a long. This stock has bottomed out, but what I don't like about this stock is how low the volatility is. I mean, it could take 2 months for it to get a 50% or 30% gain, which is not something I'm interested in. I'm playing higher volatility stocks now, so that basically takes this off the table. So I started taking a little bit off the table, and I think I'll continue doing that over the next few days. HGV, just another standard short trade. I got I think a decent entrance, and it's basically gone straight in my favor. I don't expect, maybe there'll be a reaction here, and I ought to take a little bit of profit off the table here. But other than that, I expect us to go down and fill the gap. JHG, another short trade. Where did I enter? That would have been yesterday at 32.69. So I entered right here, partial back test, and I expect this stock to hit my profit target pretty quick. I took 1 share off the table today just because it's sitting on support, and if the market rebounds, I wanted to make sure I had some profit, although it wasn't much. Moving along. I guess Livent Corporation, I got a great entry on this. It's basically gone straight in my direction. I took, at least with this most recent trade, took some 1/3 of the profit off the table, or 1/3 of the shares. Okay, Macy's has been a stock I've just had no luck with. It's let me go over the trades I took this week, or at least close this week, and here they are. So the first trade I took was, we had a clear the volume wasn't quite there, but it looked like an impulsive breakdown. So I took a short entry here. This stock rebounds, goes back up, and I get stopped out here at the red line. My second entry was the same day I got stopped out on. I did it at the back test, which I thought was, a pretty obvious back test. No, it wasn't quite a back test. It was just before the back test. So I took the second entry here. I got stopped out on the same day. I then took a third short position here at this 1428 level. And then the next day got stopped out at this top red line at the 1490 level. So this stock just whipsawed me out so many times. I think probably the first time I got stopped out, I should have taken a step back and maybe looked at why it was that this made such a dramatic recovery. I'm not really sure what I could do better, at least with the first order. I think I took a decent entry initially. I could have taken a better entry maybe at the end of the day, the previous day, seeing that it closed below the trend line. Other than that, I think I took decent entries and exits. But maybe the second time you get stopped out, you just have to say, I'm going to wait until confirmation. The high volume. After this sort of made a blow off top, it looks like it's very likely to be breaking down now, although I didn't enter the trade just yet. I may enter the trade Monday for another short entry, but I'm not really sure. I may just leave this one to be because I haven't had any success with it after 4 attempts. Okay, so Nike, I thought I had my order set up to take profit here. You can see it's basically gone straight in my direction. I thought I had an entry to take profit at this $130 level. I did not actually have the order set up, so I got a slightly worse cover at about 131. And that was, I think, for half of my position. Yeah, just over half my position. So I'm holding the rest of the position, assuming that it's going to eventually roll over down to this $120 level, or let's go a slightly bigger time frame. It could come down all the way to this $100 level for longer term support. That's if we have a really big downturn in the market. I don't really expect that to happen, but if things still look weak in the market after it hits this level, then I'll hold on to that position a little longer. Okay, Overstock. This was a long trade I took. Despite the market kind of giving warning signs, I decided to take this long position. I had a profit target up here at around $115. And you can see my entry point was here. Good entry point, I think. And this trade went in my favor for a couple days, but then, had a long, this was the first warning sign, one sort of long stem day, and then another long stem day, even a longer stem day. And so when did I start taking profits? I guess on the 28th, so yesterday, after it started turning down. And I think, yeah, I basically started taking profits yesterday, and then I finished taking profits. Like it looked like it was holding support here. I think, yeah, I think extended hours for, I'm really not sure how this was drawn out. But however I drew it out, I think maybe the 15-minute chart. Okay, yeah, there we go. So I drew this trend line on the 15-minute chart, and I decided if it breaks this line, I'm going to cover the rest of my position. And that's what happened today. Yesterday, I think it was holding throughout the day. But it was still a profitable trade. I am happy with it, even though it did not meet my profit target. Palantir is another long trade I entered and then had to cut it because, the market downturn. Basically, this is what I was looking at. He had a run up, looked strong, started, running along this trend line. Probably 15-minute chart shows it better. Yeah. And eventually broke. And I think, when did I start to cover? I started to cover and actually completely covered on yesterday. So not a very profitable trade, not enough to cover my stop loss even. Well, actually, no, for this one, it was because How many shares did I have? I had 8 shares. So yeah, I guess it just covered my stop loss. Or didn't cover my stop loss. It almost did. Next trade I took, plug. So this one was sort of more of a speculative trade that I took last week. I saw, was it last week that I entered the trade? No, it was 2 weeks ago that I entered this position. Right here, we had this, what I thought was a blow off top, and it kind of was, but right here, when it started to make a new high, I think I covered, well, it shows right here on the 25th. So I had marked out this bull flag pattern, which you can see better on the hourly chart. And it looked like it was breaking out. You know, it had the classic breakout, retest, continue the breakout. I covered, I think, right here when it was giving the first signs of a breakout. Now it looks like it hasn't rolled over yet. It's still doing back tests. If it does break down, I may take the short trade this time. And maybe this is a stock that's run up over 1,000%. So it's due for, you know, a good 50, 60, 70% correction, if not more. Peloton, this was another stock that I just got shaken out of or got beaten around on. Took an entry 2 weeks ago, took another entry, well, 2 weeks ago, yeah, and then took another entry last week, took a third entry this week. Basically got closed all 3 of them this week. And the issue is, I think, bad entry points. So the entrance I took this week, at least, was on the 27th. So we had this big jump down, and it looked like it was breaking trend, but then it recovered. So I took the position before it recovered, and I think I was out of day trades. So I wasn't able to cover that position that day. So I had to hold it overnight, and I covered the next day. No. Okay, so no, I had 1 day trade left, so I covered this position, but I didn't cover another one. I think it was AMD that I wanted to cover after it recovered on the 27th when the market was just starting to break down. Okay, so the other position they entered on the 19th. Well, I guess it had dropped way down. I was taking the, yeah, it looked like an impulsive breakdown, but then it recovered. And so I think I got stopped out. I didn't get stopped out until the 25th. So I had a pretty loose stop loss, but I still got taken out by that spike. So my plan going forward is this level really looks like the level of support that if it breaks, that's where it's going to be good to be in the short position. So I'm going to wait for an impulsive break. Ideally, it would be something that closes below this level, and I would enter the position right before market close. Or if I have more day trades left and it looks like an impulsive breakdown, then I'll enter the position the next time it punches down to probably about this level and cover if it looks like it's immediately reversing. Ruger, this was a position I took. It looked like it was breaking out. You have this sort of bull flag pattern. I don't like the way this bull flag pattern is because it had one pretty significant false breakout before, but it had a breakout and then what I thought was a retest. And so I entered the position at the retest. And my initial, my stop loss was pretty loose, but I decided to cover the position early because it looked like it was breaking down below support, and I think on the hourly chart closing below support, which told me that there wasn't a lot of, it wasn't probable to be able to recover and actually be a true breakout, and it ended up breaking down. So I covered at pretty good levels, didn't take too big of a loss. Okay, Rocket. This was a stock where it looked like it was breaking out as well, but I guess the market downturn turned that into a false breakout. So initially, I think I started getting nervous on the 27th. Yeah, when it had this long candle, and it ended the day close to my entry point. So I took some off the table at a pretty low level, but I think that's understandable. I closed the rest of the position when it broke down and closed below support or below this level, this trend line. Snap, I entered a position short on the 27th. This was another one I got stopped out of. And where did I enter the position? 47.70. So literally at the bottom. I'm not even sure how I got in at that level, but 47.70 was my entry point, thinking it was breaking down with the rest of the market, but it rebounded, or ended the day at support, and then the next day stopped me out. So the next time I'm going to enter this position will be, when it breaks this support level, and basically do the same thing, move my entry level a little lower, try to get it to where I'm watching for a lot of volume when it does the breakdown, and maybe get an hourly close below before I enter the position. So what did I do for this one? So I entered short at 1765. And then I guess I got stopped out at 1880. That doesn't make a lot of sense. Oh, okay, so I entered short when it was here expecting a bounce, and then I got stopped out because it broke out of this level. Okay, so not really sure what to say about this. I think probably I want to do less trades that bounce between channels and really focus on the breakout and breakdown trades. One, because the risk-reward ratio in those trades is a lot higher. Two, because it's a lot easier to get confirmation for those trades. A lot of times what happens in these trades, and I think a good example is on plug. Yeah, plug's a good example. I was going to do a trend bounce trade, or trade between the channels, and that's actually maybe not the best example. Neo, I think, is the better example. Okay, so the example of why I don't like to, or why I want to stop doing these these trades between channels is this. You might have a tight stop area, but what happens if it gaps up against you? Well, first of all, the probability, I don't know very well how to get the probability of a bounce between trend. Maybe in an uptrend, that's fine to take trades between the trend level. If it's early on in the trend, like say maybe right here, you start taking long positions when you know it's still bullish, and then just hold until you get until a trend change is found. But what I did was I took a trade here on plug, and it gapped up. It was a short trade here, and it broke out a trend gapping up. My expectation was that it would go down here. So for now, I'm going to take a break from doing bounces between channels. Okay, Virgin Galactic is a trade that, well, we had this big funnel pattern, then this breakout, a bull flag pattern, and another breakout. And I took this trade, at this level. I covered my position, part of my position, I think half of my position here at this first profit target, and then, or just below, since it almost made it and failed, something like that. And then this continued to go up pretty parabolically, and my profit target was way up here at $90, but the market downturn seemed to halt things. First day of the downturn, this still was showing strength, but then it, pulled back intraday really significantly. Next day, still showed strength, pulled back. And so I started covering, I guess, on the 28th. Is that right? No, I started covering part of my position on the 27th at a pretty poor level, and then I closed the rest of it on the 28th. I didn't get a great exit level because I didn't have a plan to cover early. In retrospect, I think covering at, I keep saying covering, what I should be saying closing or selling for these long positions, but I didn't have a plan to close the position early. One option that I've been bouncing around is closing at sort of arbitrary levels along the way, 1/5, 1/5, 1/5, 1/5, and then the last fifth up here. That's one way to do it. Another way is to look at the lower time frame charts and see if there's a trend that's formed, which here there was a pretty clear trend, uptrend channel, or at least a lower trend level that was formed. And you can see, it overperforms for a bit, and then it goes back down, and then it breaks below trend, tries to recover and fails. And so maybe this is where I would exit. And it would give me a slightly better exit than the last exit I took, but a worse exit than the first time. So it would give me a little bit better than what I got here. I guess the other thing I could do is get a sense of when a stock is going parabolic, and just know to cover at those super high volume, super high candlestick areas. You can see within the span of 1 hour, the stock jumped 36%, which is not normal at all. And if you saw the trend channel here, you'd know that it's due for a correction back to the trend channel at least. So take some profit off the table here in case it doesn't succeed. Can't really tell by the divergence. I guess you could here. It's got negative divergence on the hour or on the 15-minute chart, and then it overperforms or breaks through that, which normally I would say, normally that's bullish, but sometimes it can also mean a blow off top, especially now that I'm looking at it. This might be a rising wedge pattern that's here, and it's kind of a rising wedge pattern. What we found with the blow off tops from a lot of these other stocks is that they often result in crashes. So you have a rising wedge, it overperforms as a blow off top, then it crashes. So right now it's moving sideways, and this stock might continue in an uptrend. I don't see anything that says it's doing anything other than consolidate. But with the whole market in a downtrend, I don't really want to stay long on this stock. Maybe we wait for another sort of smaller funnel pattern to play out and then enter the position if it breaks out again. But until then, I'm out of this stock. Okay, Spirit Airlines. This was a position I entered preemptively. It was probably one of the many stocks that I entered before confirmation, that I entered at the right time and was rewarded for it. So I would say it's definitely not worth entering before confirmation. I could have entered right here and I would have gotten just a little bit less profit, but way less risk. And so, yeah, I entered on the 8th at a good level, I think right at this doji candle. And well, this is what I'm looking at. It had a pretty good rally. I think it's going to continue to break down all the way to fill the gap. Okay, Uber, last one on the list. This stock I entered short on the back test, got a really good entry. And yeah, so far it's just been going in my direction. It went down here, bounced, and I think it's going to continue down to move at least to here. Maybe it will fill the gap. I'm expecting it to fill the gap. That was my initial plan for starting to cover it. Probably what I'll do is cover part of my position before it fills the gap though, just because I don't know. I'll have to see how I feel about it when on the day of the trade. I guess I don't have a good plan for, will I stick to the original plan or will I modify that plan? Either way, I think this trade is profitable now. I didn't take anything off the table, but I don't think it's a good level to start taking the trade off the table yet. That probably will come a little bit later. It's got to break through another level of support, or at least retest the support.